Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is Thursday, November 21st. This will be the last one of the week. I do these Monday through Thursday whenever the market's open. We are going to take a look at Firstcash. This is out of the financial sector, and this was a suggestion from Tanya Myers. Commented, thoughts on GNTX. I will not be doing that one. It does not pay a dividend, but we will take a look at FCFS. That is Firstcash. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Join us on this journey of financial freedom. Join the Vested Interest community. Click that subscribe button down below. Click the notification bell so you're notified whenever we put out any new content. And if you'd like to buy me a cup of coffee, go ahead and check out that thanks button down below. You can do that there. Now, this is the Vested Interest Stock Screener. This is how we're going to go through the video today. We will take a look at the end and see how it stacks up. Must meet 5 of 8 typically, but today is a financial company, so we will look at price to book as well. Now back to Firstcash. If you want to check them out on their homepage, firstcash.com. That's firstcash.com. That is their homepage where I pulled this information from. Firstcash Holdings Inc. is the leading international operator of pawn stores and leading provider of technology-driven point-of-sale payment solutions, both focused on serving cash and credit-constrained consumers. Firstcash has more than 3,000 pawn stores in 29 U.S. states and District of Columbia and in Latin America, which includes all the stores in Mexico and the countries of Guatemala, Colombia, El Salvador. Sell a wide variety of jewelry, electronics, tools, appliances, sporting goods, musical instruments, and other merchandise, and make small non-recourse pawn loans secured by pledged personal property. Firstcash, through its wholly owned subsidiary, AFF, also provides lease-to-own and retail finance payment solutions for consumer goods and services through a nationwide network of over 13,000 active retail merchant partner locations. The company employs almost 20,000 people between the U.S. and Latin America. So, I mean, they own a bunch of pawn stores and they offer financial services based around those pawn shops and using your owned goods for collateral on those loans. That seems to be their bread and butter here. Now, the reason why you're taking a look at them, down 2.12% on the day. We are talking about Firstcash Holdings, ticker FCFS, again, out of the financial sector. 52-week range as low as $101.62, as high as $133.64. They are right up against their 52-week low currently. Market cap of $4.608 billion. So they are a small cap company here. A beta of 0.64, so less volatile than the overall market. That's what you're looking at whenever you're looking at beta. It's the volatility of the market, how much the stock goes up and down. That's what the volatility means. PE, price to earnings ratio at $19.03. Though you really want to look at price to book for companies in the financial sector. Not necessarily like this. Usually that's for banks and stuff, but we're going to look at it anyway and see how it shakes out. EPS sitting at $5.41 per share. Earnings date is coming up in January on the 30th. For dividend, $1.52. I believe this is a quarterly payer. We'll see that here in a little bit. Dividend yield is pretty much in line with the overall market there, 1.44%. Ex-dividend date, November 15th. We're past that, and they are going to pay out their next dividend on 11/27, so the 27th of this month. You would not be in line for that dividend if you were to buy them now. You'd have to wait a few months to get the next one. And Yahoo Finance has a one-year target of $135.20, which would represent some upside and a new 52-week high from where it currently sits. Now, I like to look at dividend yield theory to see if the company is presenting overvaluation or undervaluation. To do that, we look at their 5-year dividend yield average of 1.46%, compare it to their current 1.44%, or over here where it says forward 1.44%, same number. And since it is lower than their 5-year average, that actually speaks to some overvaluation on this one. Just ever so slightly overvalued, it's almost in line with fair value, but just a little overvalued according to dividend yield theory. Payout ratio is 26.43, so that's under the 75% that I look for there. Now, dropping down to price to book, you can see their current is sitting at 2.35%, so that is not in line with the 1% or under I'm looking for a financial company. Though, if you look here over the last year, 2.39, September 2023, you could have got it. It was a little more expensive, 2.55, more expensive, 2024, 2.88. Back here in June would have been the cheapest time to buy it at 2.33%. So that's another way to use price to book. You can compare its current to where it's been sitting over the last year and a half. If it's lower, then it means it's cheaper. If it was higher, that would mean it's more expensive. So right now, it's not the lowest it's been in the last year and a half, but it is pretty close. Dropping down to free cash flow, I like growing free cash flow over time. It allows companies to pay down debt, make acquisitions, reinvest back into the company, buy back shares, and increase that dividend over time, which is what I'm looking for. Going back here to December 2021, you can see 181 million in free cash flow. 2022 was a jump up to 433 million. 2023 was a drop down to 355 million. Trailing 12 months so far looks like a jump up back to 371 million. Though some of this trailing 12 months still represents 2023 numbers, so we'll have to wait and see how the rest of December and the last week or so in November shakes out. It's crazy that November is already almost over. Now, they are repurchasing their own shares going back to 2021, 49 million here. Big jump up in repurchase of shares along with free cash flow to 157 million. Dropped a little bit. So not only did they decrease their free cash flow, but they dropped that repurchase of shares a little bit in 2023. So I would say that's a downturn. And then same thing, even more of a decrease in the repurchase of shares so far, at least at 83 million. Now they could, come out in the last month or so and buy back a bunch of more shares. But so far, it looks like they are continuing that trend of decreasing those repurchase of shares. So I'm going to say their free cash flow is not growing. It's kind of up and down over the last few years. Now, jumping over to another source, stockanalysis.com. This is another one I like. You can pick any ones that you choose. I just recommend more than one source for information so you make sure the information you are getting is accurate and up to date. Sometimes these sources are behind a little bit in updating, and sometimes they're just wrong. It does happen. So, again, I recommend more than one source. You pick any sources that you like. They do have 3 analysts, which is not a lot. They call it a strong buy. They have a low estimate of $130. That would represent a 26.25% increase from where it currently sits. Average estimate, pretty close to what we saw with Yahoo Finance on the previous page, would represent 135.67, would represent a 31.76% increase from where it currently sits. And if it happened to hit their high of 140, that would represent a 35.96% increase. And they don't really have much of a not a big spread here between their low estimate and their high estimate from 130 to 140. And all of their estimates, even though there's only 3 of them, are currently higher than where it currently sits by a significant amount, actually, too. Jumping over into statistics a little bit, I like to look at return on equity and return on invested capital and see how well the company is reinvesting its capital back into itself. And I like 10% or better for both these metrics. Return on equity sitting at 12.5%, so that beats the 10% I'm looking for there. Return on invested capital a little under that at 7.13%. They did not have anything listed for EPS growth, unfortunately, so NA there, and nothing listed for revenue growth either. All right, quarterly payout ratio is low again, under 75% at 28.08%. Dividend growth at 7.35%. Nice dividend growth on this one, high single digits. Growth of 8 years. Buyback yield is positive 1.41%. So when they are buying back shares, they're doing it at opportune times. Shareholder yield at 2.87%. I like to see positive shareholder yield. Now, they do pay out on February, May, August, November, which is off the typical months that most companies pay out. Going back here to May 2022, they were paying 30 cents. November 2022, they raised it up. August 2022, they raised it up to 33 cents. August 2023, they raised it up to 35 cents. Most recent raise was August of 2024, up to 38 cents. So I would say it looks like their raise is in the month of August. So I would say if they're going to continue this 7.35% growth or whatever it will be next year, they're going to do that in August of 2025. All right, back to the screener. Let's wrap this one up. Understand the business. That's where we start on all the companies. There's a check there. Again, they own pawn shops. You're going to go in there and either pawn your material or try to get a loan against whatever you own. If you've ever done that, you understand what the business is. Growing dividend. Yep, it's growing. High single digits, a little over 7%. Payout ratio is nice and low, under 75%, well under 50% actually. Dividend yield theory says it's potentially, ever so slightly overvalued. Again, I would almost consider this one equals fair value, which would be close to a hold is where I'd call this one. Buy below current cost basis or 15% of a 52-week low. It's right up against a 52-week low. This was a mixed bag here. Return on equity was over 10%. Return on invested capital was only around 7%, so no check there. They didn't have anything listed for EPS. Earnings per share, so I can't give them a check there. And their price to book was over 1. It was actually at 2.35. Not quite the cheapest it's been over the last year and a half, but pretty close. So you're looking at 1, 2, 3, 4. This one does not quite meet the 6 of 9 I need it to meet for a financial company like it is. Let me know what you think of this one in the comment section down below. And thank you, Tanya, for the suggestion. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notifications bell. Most importantly, subscribe to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like FCFS you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below. If you have any questions or any comments you'd like to share with the group as well, go ahead and drop them down there. I'll try to get to them. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and great weekend. It's Thursday, so the weekend's coming up. Hope you have a great weekend, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.